Hello, it's Brian Shannon from AlphaTrends.net. Today is Wednesday, the 15th of October, 2008, and we had another bloodbath in here today. The S&P 500 finished with a 9% loss, losing $9 even at $90.85 right now. And this is why, you can't be too aggressive about taking profits when you have them in this market, and be very defensive about, holding positions overnight, and getting too comfortable with any position, whether long or short. Shorts got creamed on Monday and for part of Tuesday, and now it's back to the longs puking their positions out. Here we are, very close to the lows again, and the trend hasn't changed. The market gapped down from the open and got below the 5-day moving average and below the $95 level that I'd suggested. Break below 95 could lead to a retest of the lows, and it seems as though that's where the market's heading, is to come back down towards the 84.5, 85 level, the lows that we saw last Friday. Right now, if we take a look at the volume weighted average price since, let's take a look at it since last Thursday. If I go straight across, you can see the average price being right here at about 94.20 or so, and obviously what that means is that the average person who's been involved in this market on the long side is in a losing position, and it also means that the sellers have regained control, and now they're in a position to push it back down and see what other stops they can hit, and what else they can scare up. Again, we're in the middle of we're just starting earnings season. That adds another dimension to risk, as does options expiration on Friday. The Federal Reserve seems to love to come in on Friday morning of options expiration and give some kind of news that sticks it to the short sellers. So that's something to be aware of. But again, the path of least resistance remains lower. It was lower all day in here. I was looking at for a bounce a couple times in here today, but again, with a strong defense, then if you're wrong about direction, you can take small losses and get back involved with the primary trend when it re-exerts itself. Here we saw today, though, in the SPY, that this prior support acted as resistance early on. That resistance was further strengthened by the fact that that's where the location of the declining VWAP was. Then the morning lows, or midday lows, acted as resistance later on this attempted rally, and then just a final give up into the close, with the market closing basically right on its lows once again. We were looking at the NASDAQ as far as the Fibonacci off the Friday lows to yesterday's highs, which were right around in there. And you can see that on the SPY, we've also retraced more than 2/3 of this. It was a 61.8% rally. We're back below that, and this market just seemingly has no support. It's okay to look for levels of potential support during the day, but you have to keep super, super tight stops if you're going to get involved at any point in there. The Russell 2000 was down $4.97. We were looking yesterday at this trend line in here on the 30-minute time frame that looked like it was holding this market back, and I thought that maybe getting back above there would see us move higher up towards the bigger level of potential resistance on the daily time frame. I wasn't suggesting it would. I was saying that was a scenario we had to be aware of, and obviously this market gapped lower as well and continued to trade off throughout the day, first breaking below this level of support in the 5-day moving average at 54, and then it took that 52.5 level out that I was talking about as well, and now it looks like there's really no reason for this market to not go down and test these lows as well. This huge rally here left a big air pocket. There's not very much support in there, so it's more likely that it can continue lower. When we look at the daily time frame, here on the IWM, also on the SPY, you can look at it and say, but the volume was lower, and I'll say, again, that only price pays, and would you rather lose 9% of your money on heavy volume or on light volume? I think, though, that a lower volume test of that low could potentially lead to another violent snapback rally. But go back once again and take a look at those historical charts of the Dow that I put on about this past weekend. From the recovery high in the Dow in 1929, the market actually declined 30% and went actually 8% lower than this prior low during that period of time. And whether we're going to do that here again is just a guess, but the path of least resistance is lower. The market remains guilty till proven innocent, and it's foolish to try and fight that type of momentum. Oil was down once again. We were looking at this yesterday, saying that we had seen it come up to its declining 5-day moving average, and that the path of least resistance was lower in here. It broke below this little level of support. I said it looked like maybe the next potential area that it was heading down towards was the $60 level, which was the high from basically July of '07. We've seen that this level of prior support did act as resistance very briefly in there, and good news for the consumer, but is anyone going to have any money left to buy gas to drive around in? We'll see. Obviously that's not a concern, but let's take a look at the financials. The financials, these guys rallied up to that level that I'd said that looks like you want to be very careful up here, because this $17 to $18 level had been important as prior support in here, and now that it's been in that range and it's below all these declining moving averages, that it raised the risk once again. Breaking on the 30-minute time frame, we'd seen that the market broke below that pattern of higher highs and higher lows, and broke below what I said was the important level yesterday, which was the support right in here at about $16.70. I said basically breaking below $16.70 would likely lead to a test of the $15 level. We're not down there yet, but pretty darn close at 15.5. So the risks remain on the bullish side. They continue to, regardless of what the government does with their money in this market, regardless of what Bernanke says, regardless of how many packages they pass in Congress. There's sellers in this market, and we're going to have to run out of supply before this market can turn around again. The Nasdaq 100 was down 3%. $3, 8.9% on the daily time frame. This is the lowest close that we've seen since basically. We've got to go back to the monthly time frame in here. So we've got closes not seen. It hasn't closed down at this level since basically right around in what is this, June of '03. So this market continues to get destroyed. I had shown a couple places on where I was looking for potential bounces. One here at the S2, it did bounce, and actually there was a tradable bounce in there. And then later on in here, I said basically I would not be holding anything long at this point. That it looked like it had bounced, but that bounce had failed, and path of least resistance continues lower in here. Obviously, we broke below the 33 level, we broke below the 5-day moving average, and this market's getting closest to retesting last week's lows. I expect there's going to be huge volatility tomorrow and Friday with options expiration and just continued news from governments and from companies and that sort of thing. So I think it still remains a very volatile day trading environment, and just continue to be careful.